In this video, we're going to talk about investing, how you can get started, why it's important, and then we're going to finish up our investing games. So let's actually start right there. Here, I have these linked on Blackboard. If you remember, you purchased a company or some type of stock or an ETF early in the semester, and we're going to look these up. So, here, I've blacked out your names so I don't put you on blast on YouTube, but we got Lululemon, Tesla, Costco, you get the idea. So, you are going to relook up your company and see what the share price is, and you are only going to edit the yellow column. So, I bought ARKQ, which is an ETF that invests in innovation, because I don't have the time to look that stuff up, so I let them handle all that for me. So let's search that. I like Yahoo Finance. I think it's the easiest chart to read. So, I always switch it to ARKG. Let's go to ARKQ. They got multiple different ETFs. I have a little bit of ARKG as well, in real life, that is. So, here we go. Make sure it's the same company, right? So double check your little code right there. And it looks like we are at $71.08. So what I'm going to do is I'm going to enter $71.08 into the yellow column there, the share price. And so look at that. If I would have put $10,000 into ARKQ in September, I would have made $2,350 basically. So my final value right here, I turned that $10,000 into $12,350. That's quite a lot, actually. That's like 20% gain. So that is huge. And so you're going to do the same for your company. And people, I don't think corporations, there's lots of hate right now, and yeah, not all of them are good. They do some not so nice things, but some of them are really good. Like Costco, great. They have great leadership, take care of their employees well, give them awesome benefits, great company, right? And they do really well for their investors. And it's like, corporations are actually owned by the public. And when you're buying one of these, so let's say whoever bought Tesla right here, you're partial owner. And, people get mad because, these corporations make a lot of money. But what they don't understand is that if you buy shares in a company, you are part owner, and so you get to, it's people's 401ks that are making that money. So it's the general public that is getting rich. Now, again, lots of critiques there. We'll talk more about that in class. But, you can be a part of this wealth gain, right? And that's one of the beauties of capitalism, even though there is some issues involved, and we'll discuss that in more detail. So, okay, there's the share price. Now let's look at why you need to be investing. So we are going to actually just refresh this to clear it out. So let's say you are 20 years old right now, okay? And you plan to retire around the age of 70, and you're young. So let's say you don't have any money saved for investment right now. But, and remember, the steps to financial independence, first you want to get an emergency fund, right? Then you want to pay off your loans. Then you want to start investing. So, let's say, if you're paying off your loans now, you should start if you have some income to do so. But let's just say, you finish college, you pay off your debt, and now you're ready to invest. Or let's just say right now, maybe you're lucky and you don't have, maybe you got a scholarship or something, you don't have to pay. So let's say you just put $50 per month in because you got a part-time job, you have an extra $50 you can invest. Average return in the S&P 500 over 30 years. And when we talk about investing, I want us to think about investing for the long term. And I do have to say this is not official financial advice, but 30-year returns on the S&P have averaged 12%. So let's go with that 12%. May be slightly more risky than some of you want to invest in, but it's actually not that bad. And because you're young, I recommend it. But you can talk with your financial advisors. I'll tell you how to figure that out in a second here. So let's just run this simulation here. Calculate. There it is. Okay, so if you started at the age of 21 and investing just $50 a month, look at that. You would have $1.7 million, right? And that seems insane. But that's what happens if you put your money to work, right? Because what you're doing is you are giving you're becoming part owner of that company, but you're saying, hey, here's $50 of mine. You can use it, and if you make money using my money, I get some of those profits, right? And so you're allowing people who really know how to increase wealth to increase your own wealth for you, right? And here you can see how that wealth grows, and it's exponential. So the earlier you start, the more money you make in the long run. So let's use me for an example, because I'm investing quite aggressively right now. I plan to retire around the age of 70. I've been going kind of hard. Let's just say this isn't 100% accurate, but let's just say I have 30,000 saved up for retirement, and right now I'm putting away about $700 a month if you include my 401k or 403b, which we'll talk about in a second here. And let's stick with that 12%. Look at that, right? Like I'm only making like less than $40,000 a year, and based on the rate of my investment, I'm on track to have $12 million. And so that's the thing, is like, you know, you're gonna be a millionaire if you just like take some of these steps, for the most part, right? Not everybody, but it's not that out of question that you're gonna be a millionaire, right? And so you can just see how insane that is, right? Those gains. And as you get older, let's do another simulation for you. Let's say you graduate. Let's use these same things. Let's say you start working, and you know, by the time you're 28, you put $5,000 away, and let's say you're only putting $300 a month, and let's keep that 12% the same. Look at that, $5 million, right? And that's just consistent investing. And the way you want to do it is just every month, right? You can auto deposit, and I highly recommend just auto depositing, because then it just automatically does stuff. So even if you can only put $25 away right now, look at that, $1 million for putting $25 away per month at the age of 28 to 70 if you already have $5,000, right? Just insane. There you are, a millionaire. Not too bad. Now, you'll be putting more away, I assume. So now the question is, what do you invest in, right? And you're going to have to make those own decisions, but you can have people help you with that, right? So there's all kinds of things. If we go back here, you can invest in any of these companies that you want. You can invest in index funds like the S&P 500, which is it's 500 different companies. That lowers your risk a little bit. You can invest in like an innovation ETF like ARK. I'm a big fan of them. You can invest in bonds, right? They don't make you as much money, but they're a more stable one if you're nervous about investing. You can invest in gold. Some people are investing in Bitcoin, right? These things are more risky. But you know, you need to manage your risk. And if you don't know how to do that, you can create an account, and there's all kinds of companies. So like right here, we have Fidelity. I use Fidelity for one of my accounts. I have a few different accounts. Super easy. I give them a call, and I ask them what you can do. Basically, you can call up Fidelity and say, hey, I'm young and I want to get started. This is how much money I make. You know, and they'll ask you, okay, let's get your account set up. They'll help you do all that. They'll show you how to put the money in, and I'll post some videos for extra credit that shows you how to do this on your own as well. And they can give you some advice, right? You can also talk to your parents, and you can say, hey, you know, I might want to invest. Do you guys have an investment company? Because there's lots of like little family offices out there that can invest for you, right? And so you don't have to even think about it. You can set up an auto pay, and the money just goes in, and you know, I was listening to somebody tell me the other day that they had been putting money away in their retirement, and they're like 45 years old and they're making decent money, but their company was just doing it for them. They opened up their account and they were like a multi-millionaire, right? And they had no idea, right? And they're like, oh, I can retire, right? Like you can retire at the age of 50 if you do things properly, right? And then you get to do whatever you want with the rest of your life, right? Charles Schwab is another company. Vanguard is another one. Fidelity, when I signed up a couple years ago, was the best deal for me. But yeah, you can check these out, right? And now, when you're investing, you need an investment account. Kind of like you have a bank account, like you have a checking account, you have a savings account. There's different accounts that you can invest in, and these help us for tax purposes. So let me actually show us this. So there's different investing accounts. And here, the first one that I want to talk about, excuse that. Oh, here we go. We're getting, let's big screen that. Swap presenter. There we go. All right, we are back. So these are your different investing accounts. We got the 401k, 403b. There's a bunch of different names for this. This is through your company. So if you work for a larger company, I get a 403b through Boise State, especially these larger companies. They want people to be investing for the future. And what they will do is it's called an employer match. And this is free money. So you need to take advantage of this. And what they'll say is something like, the employer match is 100% of 6%. And so let's take a look at what that means. So you get your paycheck every 2 weeks, right? And this is how it works for me. Every 2 weeks, I'm required to put 6% into savings, which is about $200. So I put in $200 of my own money. And then what this means is that the company will match 6% of that 100%. So, or 100% of that 6%. So the company will put in a 6% for you. So that's $200. So in some companies, you don't have to do this. A lot of people say, oh, well, $200, I'd rather just have that. We're going on vacation. But it's like, you're missing out on $200. Like, this is $5,000 a year of a raise that you're getting just by putting money away, right? And then you watched how much that grew, right? So free money, you have to max out your employer match if you have a 401k, 403b. We also have Roth IRA, which is an individual investment account, and then just a normal IRA, which is an individual investment account. And so the major reason for these accounts is that if you put money away and you don't touch it until you are of retirement age, the government wants to reward you for doing that, right? It helps stabilize the stock market potentially. It also helps people prepare for retirement. And what happens then is they will give you tax breaks, and you get taxed a lot of money if you're not doing this. So people will buy stocks on Robinhood, and they might trade stocks. You need to know, or if you're trading Bitcoin or something like that, you need to know those are all taxable events, and you got to pay taxes on each one of those. But if you use one of these investing accounts, right, which is similar to, again, a savings account or a checking account, the government is going to give you a tax break. So for a 401k, if you take it out early, you get penalized. So you need to leave it in until you are retired, but then you get to take this money out without paying huge taxes, right? A Roth IRA, you don't have to pay any taxes at all. You pay your taxes when you get paid for your income, but then if you put that money away, you can put $6,000 into this account per year, and then you don't pay taxes when you retire. So it's going to save you a ton of money, like potentially $1 million, right? And then the IRA, this is you saving taxes on your income. So you're young right now, and you can talk with financial advisors for what you should do. But typically, if you don't have the option of doing a 401k or a 403b, you want to open up a Roth IRA account. This is what I opened up on Fidelity, and you basically put your money in every single month, just auto deposit $25, whatever it is, and then you have to buy some stock or some share or something, and then that money will grow for you, and you just can do very well for yourself. So, okay, I think that's good enough for this video. Put some thought into this, because you can make a lot of money by doing this. And, if you make a lot of money, then you can do a lot of good for the world. So, all right, that's good for this video. I will see you in the next one.